Well, after hitting a record high yesterday on expectations the Reserve Bank will soon cut interest rates, the market decided to take a breather, which led to a very small drop of 0.1% for the local indexes, the ASX 200 and the All Ords. But as you can see, ASX Limited, the company which operates the share market, had an absolute shocker with an 8.6% drop in its share price. That's because the corporate regulator ASIC is currently considering whether to allow a rival stock exchange to open in Australia, one that would be operated by CBOE, or the Chicago Board Options Exchange. So if CBOE's application gets approved, that would mean the ASX's days of being a virtual monopoly will come to an end, and it would have less power to charge companies fees of up to $1 million just to get their shares listed, and $120,000 per year to continue being listed. And then there was yesterday's stuff up by the ASX, which caused $400 million to be wiped off the market value of TPG. In a nutshell, the ASX put out wrong info on its website, which implied the telco had entered into a $650 million deal to buy out an automotive software company called Infomedia, which isn't such a great fit. But it turns out the real purchaser was an unlisted private equity firm called TPG Capital. TPG Telecom, meanwhile, wasn't too happy, saying the ASX's wholly avoidable mistake caused serious damage and is currently reviewing its options. Now, looking overseas, markets in the US, Europe and Asia all performed better than Australia today. Oil and iron ore prices fell, and the Aussie dollar has risen to 65.2 US cents. And that's finance.